S&P, Nasdaq, and Dow started off the day on a bearish note. We have seen the indices slumping sharp from the record levels which we had seen yesterday. Also, yesterday was a swingful day where we have seen a drop and a recovery. So, what to expect now from the US session in S&P, Nasdaq, and Dow? We're gonna see with the help of charts and indicators. This is the second update for the day, and this is the only channel to give you 2 updates a day with detailed analysis and logical levels. Subscribe, press the bell icon, do like, share, and comment, join the free Telegram channel for live updates, and join the channel memberships here on YouTube to support the effort. Let's start first to look into S&P, followed with Nasdaq, Indian Dow. Let's start with S&P first. And yes, if you're not subscribed to the channel, subscribe, press the bell icon to get the notifications, join the free Telegram channel for live updates, and join the channel memberships here on YouTube to support the effort. Now look at S&P on the hourly chart. See, twin peak is formed and it has shown a greater struggle, as we have discussed, that it has to now break beyond 614,042 zone. Then only we should treat this as bullish. But at the same time, I can see it is shying away from breaking below 6100. Remember, it has to now trade below 6100 in order to confirm a reversal here. See what's happening. It is still delivering or trading in this bullish channel, which is slightly tilted on the upside, which is still a bullish indication. So now very important for S&P to trade below 6114, 6110 zone, and then 6100. If these two levels are taken, you can say that the bears are back in action. Stochastic oversold here, MACD bearish, and RSI trying to recover from the bottom. If you look at the two on the 2-hour chart, similar observation. See, it is still respecting the 20-50 period moving average, but it hardly takes one candle for it to reverse and slump. And now once it trades below 619, 6100, you can expect 6092 and 6080 as the prime support. Below 6080 is where the real game will start, where we are waiting for a good plunge. Right now, I will not confirm this as bearish as long as 6080 is respected for the day. The stochastic has dropped here. The MACD trading bearish. The RSI is also trading with moderate bearish bias. Look at the 3-hour charts. Whenever prices diverge, it comes to take the support from the 20 period, and now taking the support, it is trying to recover. We have to wait. We have to wait for it to take a dip below 6100 in order to confirm a reversal here. The stochastic looking downwards. The MACD trading bearish. The RSI has dropped. On the 4-hour chart, similar observation. See, very important point to note, the support it is taking from the 20 period moving average. Thus, it is very important for the S&P 500 to trade below 6114, 6100 levels. If 6110, this is the first support zone, and 6100 the second. Only and only if you see it staying below these two, you can expect that the bears are back in action. Stochastic looking downwards, which is a bearish sign, and the MACD is also trading with divergence, which is again a bearish sign here. Likewise with the RSI. Coming to the daily chart, the only worry point I have from S&P with the daily charts is, see, it is increasing body size for the last two candles were seen, but the most important thing is the double top it is formed. Double top is indeed a bearish sign, and now after forming double top, it is trying to erase the gains. Now it is very important for S&P to break or breach 6100 levels, which will confirm a reversal, else I will not treat this as bearish for the day. In fact, till 6080, do not treat S&P as bearish. The stochastic though is overbought, MACD is still in green though, and the RSI is running flat. So mixed indication here on the daily chart. So looking at this, what I will recommend, a buy at 6132, expect 613640 zone as the first resistance zone, and if it trades beyond 6140 till 6144.45 first target, and 6152, you have to be careful. If it trades beyond 6152, stay bullish for 6165, 6180, and then towards 6200 levels should be seen. Chances will be less though, but yes, these are markets. On the downside, I will recommend a selling entry now at 6118, expect 6114, 6110, 6108 as the next target levels. If 6108 is taken, then 6100, 95, or rather I'll say 6100, 1692, and if 1692 is also taken, stay short for 6080 and 6060 levels as the next targets. Below that, a major correction should happen. Take your positions accordingly. Let's move to Nasdaq. Now, before we move to Nasdaq 100, see, if you want to learn this art of trading, join my mentorship batch. If you just want to trade as per the signals, be a part of my signals channel on Telegram. Connect with me, write an email, ping me or Telegram for your queries. And if you're looking forward to a broker which offers you a SAF-free account with lowest spreads and no hidden charges, easier transactions, and easier withdrawals from across the globe, you can find the recommended broker link also in the channel and video description. Now, see, for Tech 100 to trade bullish, it has to now trade beyond 22,220, 22,250 zone. Only and only if these two levels are, you can say, the bulls are taking over. Else, as long as Tech 100 trades below these two levels, we should not be treating this as bullish. Now, why we should not be treating this as bullish? Connect these dots, connect these dots. This is how it has been trading. Where are the lows here? Towards 22,000, 21,950. And we know that if that is taken, then 21,800 is also very much possible. But right now, I can say it is too early to conclude. Look what's happening. Rise, retracement, higher low, so it can possibly move towards higher highs, which means 22, 240, 260 zone. And beyond that, it is going to deliver a massive move. Stochastic MACD on the early charts is trading with divergence and bearishness. The RSI is looking upwards now. On the similar observation on the 2 hour chart, see after retracing, it is trying to recover. Higher lows are seen, but lower highs, which means it is now very important for Tech 100 to break beyond 22, 200, 220 zone, and only if it breaks beyond this zone and specifically beyond 22, 240, 250, you can say now the bulls are taking over. As long as 22, 240, 250 is not taken, do not treat this as stochastic is starting to rise while the MACD is right now bearish and the RSI is starting to look upwards. On the 3 hour charts, when you look at the 3 hour charts here, very good support is seen from the 20 period. Lower highs are seen, higher lows are seen. Consolidating here, it can still reverse. It is not to be treated bullish, but only thing is it is right now seen taking support from the 20 period. Now this zone between 22 100 to 140, very critical support exists in between this zone, and as long as this zone is respected, we have to be careful. Now it is very important for Tech 100 to trade below 22 100 and then 22,040, 22,000 levels, which will confirm more bearishness towards 21,940, 950, and then towards all the way towards 21,900 and 21,800 is also possible. But let's have a further look. Stochastic is looking down, MACD is bearish, and the RSI has dropped here. On the 4 hour chart, see most important part is the support it is taking from the 20 period moving average. It has to trade below this, and see, this is consolidation. A breakout either on the upside or on the downside is going to bring either the bullishness or the bearishness. So once it trades beyond 21 to 22 to 2240, you can expect it to in fact move towards 22 300 as well. Stochastic has dropped, MACD bearish, the RSI is also trading with moderate bearishness. Coming to the now look at the daily chart. See higher lows are seen, higher highs are seen. Where are the highs here? Towards 22 300, 320. So now once it stays beyond 22 240, 260, you can expect a move towards 22 300, 320. And if that is taken, remember it is delivering stronger candles here. We can see a move which can take it towards 22 360, 400, and in fact 22 500. But what I am looking at is the divergence of the price from the moving average, and thus a break below 22,000 and 21,950 is going to bring strong bearish momentum. Stochastic overbought, MACD rising, RSI flat. So looking at this, what I'll recommend is buy at 22 200 levels. Expect 22 220, 22 240, 250, and if that is taken, chances will be high that 22 300, 320 should be there. Beyond 22 300, 320, there is no looking back. Stay bullish for 22 400 and 22 500 levels as the next targets. On the downside, a selling entry now is recommended only and only if you see it is staying below 22 140, 120 zone. Expect 22,080,070 as the first target zone, 22,040 as the next, and 22,000 as the third. Below that, 21,950 will appear, and then 21,900. And if that is taken, stay short for 21,800 as the next targets. Trade accordingly. Let's move to Dow. See US 30 on the early charts. What's happening? Connect this. Connect this. You can find what's happening. Higher lows, lower lows and lower highs is seen trading in this bearish channel. Where are the lows of this? Now towards 44 300, 44 200 zone, which is indeed going to remain a greater support zone. Look at the consolidation here at the top, 44 600, 650. I have shared earlier in the day as well. This is going to remain the prime resistance. The stochastic has bottomed here while the MACD and RSI is still having room for further rise. When you look at the 2 hour chart, see now notice it has formed almost symmetry here. It is still delivering higher lows here. Wait for it to stay below now 44 400. That will be a confirmation of more bearishness all the way towards 44 300 and 200 levels, below which you can expect a greater correction, which is going to take the prices all the way towards 44,000 and 43,800. Stochastic has dropped here. The MACD is trading bearish. The RSI is also dropped. On the 3 hour charts, and similar is the observation, but it is too early to conclude that it is turning bearish. It is reversing from higher lows, and thus I will still not say that it is turned bearish. But yes, if you see it is staying below 44, 440 and 400, you can stay short from there. Stochastic dropping here, MACD bearish, and the RSI is almost flat. On the 4 hour charts, also similar observation, nothing different. Moving averages are on the verge of a crossover, though not yet crossed over. As long as these do not cross over, do not treat this as bearish. Stochastic MACD RSI is still showing signs of bearishness here. Coming to daily, on the daily charts, one important point is the support it is getting from the 20 period. None of the candles closed below 20 period moving average. Second is lower highs, which is showing, which is a bearish sign here. See, consistent lower highs are seen, and the last three are specifically beautifully aligned. It is very, very important for US 30 to now trade beyond 42, 44,600, 44,660, and 44,750, 760 zone. If and only if these levels are taken, you can consider this as bullish. Else, what's happening? First bearish candle, this can deliver a second bearish candle, and this could be a bigger one as well, where the prices could slide all the way towards 44,200 or in fact 44,000 levels. Stochastic, MACD, RSI all are looking downwards. So looking at this, what I will recommend is a buying entry only above 44,540, where you expect 44,600, 650. And if these two levels are taken, stay bullish for 44,710, 720, 44,800. Beyond that, sky is the limit. On the upside, we are looking forward to 45k. I do not expect this to happen, but these are markets. On the downside, a selling entry now is recommended at 44,440. Expect 44,400. Below 44,400, 44,300, 320, then 44,240, and then 200. If these levels are taken, stay short for 44,100 and 44,000. Below that, 43,800. Anything and everything is possible. These are markets. Thus, take your positions, take your trades accordingly. Like, share, subscribe, and comment. Join my mentorship batch and signals channel. Reach out to me for your queries. Join the free Telegram channel for live updates and the channel memberships here on YouTube to support the effort. Thank you. Have a great, profitable trading day ahead. See you again tomorrow with the Asia and Europe session with more updates. Thank you.